Today's video is going to be on options and how I use options to get extra income out of my dividend plays. We earn about $100,000 a year in dividends here on this channel, as I always say, and I'm using the dividends to pay back my margin, which every account and every brokerage account, if you put in $1, you get $4, this margin purchasing power. So I use this margin purchasing power to squeeze extra income out of my dividend plays. All of these dividend plays that you see in my portfolio that I'm about to show you, I use them to pay my bills in life and live financially free, but I use margin to get extra income out of it, and I can sell the margin anytime. It doesn't show up on a credit report. It's good debt. I can click sell. So, and if the market ever gets bad, I can just reduce my margin anytime and reduce my pressure. We're beating the market. We're up 14% for the year. The Dow's down 0.5%. The S&P's up 6%, and the Nasdaq's up 17%. So the Nasdaq's beating us barely right now, but I've been saying we're going to catch up as growth balances out with value names, because that's what's happening in my portfolio. We're losing right now to growth. We have a lot of value names. Anyway, we did past videos on that. Check that out. But I have 5 reasons why in this video I sell options, and they might be helpful in your portfolio, especially when running margin. Also, it's important to note here at this channel that we're not only going for income and paying our bills and living financially free, but the income that we do make, it qualifies to banks for loans. This means that you don't have to have a job in order to qualify for a house or a car. You can use your dividends to live off of, and it provides a financially free lifestyle. If you need help with margin or with how I play Cornerstone, email me for those e-guides at aikentod48@gmail.com. We use about $250,000 in margin, as you know, to get that extra income. And the margin that you see, that $250,000, would be a lot higher, this number, if it weren't for these sold puts. I sold these puts first and foremost to lower my margin debt. So that's reason number one why I sell put options. I made about 25 to 30 grand on selling these options. If you just add up these columns right here, 2 contracts, 7 contracts, okay, so it's like this. It's like 7 times 3, that's $2,100. 2 times 21, that's about $4,200. 15 right here, so 1 contract, so that's $1,500. If you go add up all these numbers, 9 times 3, that's $2,700, 9.9. So that's about $3,000 right there, $2,000. So if you add all these up, you'll get to about $25,000, which lowered my margin debt by $25,000. I then took the proceeds of this money and invested in more income names up top, all these dividend names, which if you want to see if you want to see my funds in particular, all of my holdings, go see my past video. I did a complete review of all of my holdings. So I use the options to lower my margin, yes, but then also to increase my income as I take the proceeds and buy these other funds that have 10 to 20% dividends. And the $100,000 in dividends that I do make will pay back this debt in less than 3 years. And then after that, this number down here, the 362, will turn to 662, and this number in debt will be at 0, and we'll be left with all these dividend-paying assets, all free and clear, all to ourselves. And the income is just generating $100,000 per year for life. So it's financial. It's a way to be financially free, selling these options, well, using dividends to pay your way, and then using margin to get a little bit of extra income out of your dividend plays, and then selling options on top of that to lower your margin debt, and then take the proceeds and invest in more dividend yielding names. You just need to be aware that when you sell an option, it takes up your equity, just like a stock would. Just like when you buy any of these funds that are 30% maintenance, if you buy 1,000 of a 30% maintenance, it's going to take up 300 of your equity, as we always say. When this number gets to 0, you're at a margin call. Your market value doesn't matter so much as, this is my market value. The market value does not matter so much, this 360. It's this number that matters. You can spend and travel the world, do whatever you want in this account, pay your bills, buy food, whatever, but when this number goes to 0, you're at a margin call. So you always want to keep a big cushion there for your available withdrawal. So when you sell the options over here, you're going to have to keep in mind that they take up your equity as well. So if I sell options on UPRO down here, which is 75% maintenance, at 60 a share right here, 60 a share, at let's just say 100% maintenance, that would take up $6,000 of my available for withdrawal. But then they factor back in the cash that you get here, this $20. So that adds to your available for withdrawal. So net, if this was 100%, 4K would be taken up because I have 6K here taken up for assignment, and then I have the 2K, the 2100 of cash that they give me. So that offsets what was taken in my equity from selling the put in UPRO. Also, the third reason why I do these, why I sell these options, is to increase performance, because as you see, a lot of these are indexed. UPRO, TQQ, TNA, that's the Russell small caps. These are the indexes. So if the indexes are going up, then I'm going to be benefiting in these options. Even if the indexes don't go up and they just go sideways, well, I still benefit. When you sell options, you sell time. So you don't even need the underlying to move for you. You're just going to let it expire worthless, and the premiums become all yours at the end. So that's why selling options is so great. The fourth reason why selling options is so great is because it lowers your risk. It lowers your cost basis. People think selling puts is so risky. It's actually the opposite. If you go look at, let's say, a RIOT right here, okay, RIOT, $10 put, okay, that's the strike price, $10. This is Bitcoin. This is the way I play Bitcoin without actually taking the risk. Because, you know, the reason why I'm selling puts in the first place is because I'm in margin and I like to control the assets without actually owning them, because that adds extra risk in, and it adds extra margin in, especially when these vehicles don't pay a dividend. Like RIOT does not pay a dividend, so why would I own it outright? Yes, you can get a lot of movement outright in the market and you could win in Bitcoin, but it's also a risk. It could lose just as easily as it could win. So I'd rather play Bitcoin much safer. I take the $10 strike price and I minus it from my premium. So the premium I received was $5. So 10 minus 5 means my cost basis is about 531. So my cost basis is 470, 429, 469, something like that. So 469, let's go look at the true price of RIOT, and we'll see that RIOT's the true price is 1153. So I have 50% over 50% before the stock that the stock has to reach to fall to the downside before I'm assigned to my shares. And if I got assigned at the lows, that's good, because it gives you an attractive entry point at the lows. And when the market, if the market moves higher and Bitcoin moves higher, then you got to buy at the absolute lows. So a taking assignment is what you want in these options, because you really want to buy these things long. So they're a way to control the underlying without actually owning them and adding to your margin. But if you do get assigned, that's the even bigger benefit, because you get assigned, you go long on the asset, and you can potentially make much more money in the open market than you could just selling the option, because you can only make what you gain in these premiums is all you can make in the option. But when you're assigned, if you're assigned and you own the shares, well, then you can make potentially unlimited money. So that's my fourth reason why I sell these options, is to lower my risk, lower my cost basis. You saw how I did that with Bitcoin, with RIOT, and all these other funds. I did the same thing. I lowered my cost basis significantly by selling these options. If you want to go see my past video on how I sold options on Tesla, check that out. I'm playing Tesla all different ways. TSLA, selling options on it, hedging it with a TSLS, but I don't actually own Tesla outright because it doesn't pay me a dividend. Yes, you can make a lot more money on the long side with Tesla, and I buy Tesla in a different account. Excuse me. The rest of my family, I trade for them as well, and they all have different goals. So I'll buy Tesla, let's say, in my dad's account. So I'm getting the best of both worlds, depending on what our risk tolerances are in my family. I spread the positions around in each of my family members' accounts. So, and then the last reason why I sell options is to diversify from the stocks that I have with low volatility. So a lot of these stocks that I have up here, like consumer staples, Whirlpool, Mo, these are slower moving stocks that have low volatility, so you can't sell options on those, but they usually pay pretty good dividends, so I'll be in them for the dividends, and that's why I'm owning them outright. They have a dividend and they're slower movers, so that they don't hurt me to take this risk. But when I want something that could get me higher premiums but does not, because it has volatility, higher premiums but does not pay a dividend, I sell the options on those. So I have about 5 sectors in here on the sold options side: financials, FAS, UDOW, that's my industrial, because you can't really sell options on industrials. They don't have good volatility. A lot of industrials don't have good dividends, so I sell the option on UDOW, and it's the index, so I perform with the indexes as time goes by. I'm just selling time on UDOW. So I have about 5 sectors of the sold puts: technology, Soxel right here, financials, like I said, industrials. I have some energy with Silica up here, and healthcare with Labu. But then the other 5 sectors, like consumer cyclical, consumer staples, utilities here with ZTR up top. That's my utility play. That's why I have 3,000 in that. And metals and materials. These are in my stock sector. So the other 5 sectors are in my sold puts section. So I have my sold puts 5 sectors here, and I have another 5 to 10 sectors in my stocks. I have some overlap with my stocks, and my stocks also have real estate, but I have some tech in my stocks, for example, there, and I have tech in my sold puts. So there is some overlap, but generally they achieve full diversification. It's like a mini portfolio within the portfolio of the indexes. So anyway, I hope you like this video on why I sell my options. I do it for 5 main reasons. I want to control the asset without actually owning them, since I'm in margin, and they provide me 5 crucial benefits because they lower my margin debt, they increase income, they increase performance by selling time on the indexes, they lower my risk and cost basis, as I demonstrated with you with RIOT and Tesla, if you check out my old video on that, and they diversify away from stocks and sectors with low volatility. So this is how I also increase my performance and increase my income in the process while lowering my margin debt. So selling options is one of my favorite strategies to lower my debt and playing with margin and increasing performance in my account. Hopefully you can use this to your advantage and lower your margin, increase performance as well. Just be aware, again, that when you sell options, they take up your equity, just like when you buy a stock. And when you're in margin, you want to keep this equity number high so you avoid margin calls. All right, so that'll do it. If you have questions, leave comments in the section below. If you need help with my e-guides, again, email me at aikentod48@gmail.com for margin e-guides and the cornerstone e-guides. Keep the positive comments coming, and I'll talk to you soon. Thanks.